wait, Josh. You just make video on Friday saying a market going to gap down. You can't say it's going to go up now. Why you say this, huh?
Yeah, I know, Ahmed, but some things came up. It's not like did you watch the video?
No, Josh, listen, man. Your title, you say gap down. Now you say market bounce. How am I supposed to buy the play? What play you make, huh?
Ahmed, I think you should watch the videos, because the titles, usually my videos only describe like part of it and I elaborate it and we try to keep it like balanced, you know. Does that sound familiar?
Okay, Josh. But the last question, do you think I should trade Forex or option? Why you do Forex better, huh?
Ahmed, I have to start this video. I think it'd probably be better if you just watch the other videos. You'd probably be more beneficial than asking me those questions. And watch the videos too, the title. So, sorry about that. That was Ahmed, you guys. I'm sure some of you know him. You've seen him in some of the videos. I don't know, got into him right there. That was weird. But you guys see the title of this video. He was a little bothered by it. But the stock market could go up. So what? So what's going on here? What are we talking about? Because the market, it had a monster rally. I'm going to talk about that. I want to recap it again. This is what's happening over the weekend. You know, we were taking our information. Some stuff came out. I was reading around, and I want to bring this up because what did happen, it's an update on the reserve requirement. Like I said, this is my whole strategy with this. I find pieces of information and I want to run with it. You know, I want to explore it, and that's what I'm saying. That Chinese reserve cut. Go watch my video why I said the market's going to gap down, and I even said that I'm expecting, again, this week is going to be very eventful, and this is, again, another one of those reasons. So what you could at least take out from a lot of this, there's going to be volatility. There's volatility in the videos, but what this is, there's more developments that I'm going to discuss with it. I think you guys will like it, but I want to talk what could make the market go up. So now, and that's what I said in the first video, we know what could make the market go down. We know what we're looking for next week, but now there's some new info on the table. We got to see kind of the news over the weekend, what's been popping off, what's been happening, and now we could say, okay, well, what could make the market go up? So now you guys could see while we're playing and handling this volatility, you guys are able to start positioning yourself. You see, it's what, not only positioning yourself, but know what to look for. And remember, be nimble, be smart, scaling in, all that. So we're going to be on stream tomorrow. I want it to be a popping stream. So I think I might do that. I'll give one scholarship assignment right now. I did this before. Whoever brings the most people, I'll give you 2 scholarship points. That's what we're gonna call them for now. Remember, I'm gonna give you guys, I think we're gonna set a limit and you reach it, and then you get your scholarship. So I'll give you 2. That's like completing 2 tasks, maybe 3 if you do a good job. But whoever brings the most people, that's it. Someone did it in the chat last time when we first did this a month ago. It was Brad Childs. I'll never forget the kid. Like, he brought like 15 people. Like, I'm here because Brad Childs. So get people to tell me who. Get your name out there. Show me what's up. But that's your task. If you want to tag it below in the comments for people, that's on you. If you want to give it away, less competition for you. That's on you guys. What you want to do, that's on you. So let's talk about this stuff. It's going to be fun because this is going to go history back to even not too far of history, which I like. We're going to get to talk both. We're going to go back to 1970 and Bretton Woods, and we'll discuss some of that stuff. But then we're going to go back to 2015, and that has been a cause of concern for me. That's when I did the flash crash, $2,000, $250,000. That was with options, and that was when we first saw emerging market growth concerns. So this is something I've been saying a lot because this is the issue I feel that is coming back. It is going to be China and then oil and energy, and this had important implications. So what happened in 2015 and seeing how it played out to today relative to the market is very, very important. So 2015 went down. That was the first time we saw China's yuan devalue. So the issue is that caused first China growth concerns, and China started collapsing, then it stopped out of nowhere. Why? There was something, it was more of an implicit agreement. That's where it was either implicit, I don't know if they actually enacted it. That's what I'm still unsure, called the Shanghai Accord. But pretty much it was an agreement between the countries, China and especially America, to stabilize the currencies. And now this happened before, that's why I'm going to bring up the history. So this is a political event that could drive. It's either, if it happens, it could be good, but if the market, I really understand what I'm telling you right now. If the market, you guys might see this talked about in the news. You might see other people start to talk about this. Whereas if the market picks up stuff, and it doesn't have to be just this piece of information. Don't let me, this is the piece I found. This is what I'm looking for to drive the market up tomorrow and in this next week. The market's going to find something to cling to, and that's why I'm highlighting this, because this could be a good one. It could have a positive. It's pretty much a positive flip on why the reserve requirement was bad, which I'm going to talk about. So if that does occur, anything where the market could grip to positivity, we're coming off the rally and hold one of these rallies, that'll be good. But what I'm still suspecting, we saw what happened last week, it could hold 3 days, but give me 5 days, we'll talk. But if it can't hold 3 and it starts to look weak and some of the negative news develops, then it's not going to look too hot. But before I talk about the Shanghai Accord and what the big part that could drop the market, let's talk about why we thought the market was going to go down last week and why I still think it was. And it was because of the Chinese rate requirement. So we discussed that, but now the updates so far, the market as they've digested it, all the reasons I listed for the rate requirement in the first video, they still hold true with the Chinese New Year, why it makes sense, why they wanted to do it all of a sudden. But now they're kind of saying it's gonna have a transitional effect. It's kind of playing it off as if this is totally all well and normal. And, they're pretty much saying that it's natural. Last time this happened, the markets actually took it well. And given there's like certain debt maturity and market being taken out of the market, this rate requirement is simply going to balance out money left from prior maturity. So it has a positive case, or not negative, which is good. But that's if that's the case. However, I'm skeptical because that's what they said in 2015 about the first devaluation when China did that the first time in 15 years. And again, these rate requirements were sometime, I think the first time in 20, besides 15, it was like first time in like 16 or 19 years. Oh, no, that was Apple's, profit warning. That was Apple's first profit warning. That was their first ever negative profit warning in 16 years. Pretty crazy, right? Some of you are 16. Some of you are 70. I love it. Diversity. Stock market. So comment below. Whatever your age is, we need some diversity. I could learn from the kids. I could learn from the old guys. You guys could learn from me. I'm 25. I'm in the middle. I'm quarter century. It's about to be my birthday too. So if you guys want to get me any gifts, I like water and water. That's pretty much all you can really buy me that I value at this point, unless you want to just hand me money. But a hug would be nice. But let's continue. So pretty much there's that could, the markets are saying that the rate hike or the rate cut might not be that bad. Now, the next thing that could be good for the markets is that pretty much now the market is starting to digest Powell, and what he said is very dovish. So it looks like all across the board, people were seeing what Powell said as dovish. So that is going to be interesting because he was pretty much, they said they're taking the QT off of autopilot. They're going to look at the markets. They're going to be more patient. The market's saying that's good, but again, I said watch out for the rate hike surprises. So that's going to be something. We had the good jobs, but like I said, watch the other videos where I said wait for the sentiment to shift, and people wait for that sigh of relief. And again, and I'm not saying wait for that sigh of relief because we're so bearish and we're going to wait for the world to end. No, because that sigh of relief means you're going to make money on the upside. Look at the options for when the market goes up. That's why, and like I said in the last video, be nimble. You guys don't pick a side. We don't pick side. We're a cult, okay? We do not identify with anybody. We just do our own cult money-making things, okay? You don't have to, listen, man, you guys want to do politics, this, that, you guys, don't get involved. Up, down, bear, bull, who cares? We are just observing, and we like favorable odds. We'll facilitate. We're bandwagoners. That's pretty much all we are, okay? We like the winners. We go with the winning team. So, but you got to know why they're winning, and you got to know why the odds are going to switch on the team. That's pretty much all it is. So, yeah, that's dovish. So now, let's go back now. The big reason. Shanghai Accord, this is what Goldman Sachs said, and this is where I got it. I was reading an article, and people have talked about this, where I'm going to talk what the Shanghai Accord was, but now why it could be positive for markets. And I'm gonna take a break here. I'm gonna drink some of my Red Bull. My arm's hurting. I actually worked out yesterday, so hold on. So that was a trip. I took like a really big break, man. Shanghai Accord. But what the Shanghai Accord was, after the 2015 devaluation, all that, people were worried. You know, there's the deval, Chinese deval, Fed wanted to raise rates. People were worried about a hard landing in the Chinese economy. So during the G20 or the G7, you know, around January, February, they came to an agreement that, and this is where I said it was informal or implied, where they would stabilize the currencies, essentially. And what they did was allow the peg between the dollar and China to stay the same. So China weakened, so it was really a forceful devaluation of the dollar. So go look at my last video on deflation. Again, too, and you see, it was pretty much the dollar would weaken against China. So it would allow, pretty much if the dollar weakened, it would allow China to lower the peg also in place with it. So, but the issue was, because the dollar kept getting stronger, that's going to weaken it too much. So they were trying to kind of have a balance. It's weird how it works, even when it sounds, some of you might, wait, hold on, it doesn't make sense. That's the problem. It's two competing monetary policy objectives, but in essence, it's a flood of stimulus. And if it works temporarily, that's the thing. It's just so dynamic where it could cause currency stability for a little bit, but that's the thing. I think the fact that they're doing this is that the yuan is getting out of control. But now here's the piece of news that could make it rally. It is based upon the fact that some people are thinking now another agreement could be hinted. I don't know where this rumor is coming out. People are saying some policy signals or the rate cut could be signaling that, where they think we are on the brink of another Shanghai Accord type thing, where China, the US, and other countries are kind of all going to come together and be like, yo, these currencies are fucked up right now. Let's rebalance this all, and let's everyone agree to kind of keep this in place for a little, because if China's slowing down more, and if a trade deal falls through and this escalates and gets even worse, that is not going to be good at all. Because now you see where currencies are at, the weakening again, and that's the whole point of the currency stuff, is that they want to stimulate certain exports from China, from the US, and do that. So now we have all this competing stuff, this stuff with Apple. But again, the point here is that if the markets could start to perceive this as bullish, if we get something, but that's something to be looking out for now, is hints of any policy easing, whereas that last time China did that, it helped stabilize the markets for about a year, and then Donald Trump rally, taxes, that came in too after that. So this has a chance to stabilize it if it comes in, or anything of this nature. But now again, back to the reverse side, what this is saying to me, not even negative, I don't even know if you want to interpret this as negative or positive, or can even do so, but it's the fact now that things are getting admitted to, or even that it's on the table. The fact that China is making these moves, whether it be for maturities, you know, the rate cuts, all that, but the yuan is weakening. And like I said, that's why it's becoming a gray swan. And it is the gray swan because now it's weakening and getting to a point where it's kind of going unnoticed. And I think if investors start to notice the relative weakness to it, or it may not be weak right now, relatively speaking. I don't know how, because and you know, with whatever stimulus is in place, it's allowed trade to sustain and somewhat grow. But then if that pulls back at all, or if that falls or anything, so that's really the main thing I'm looking for. But I think this situation is going to develop very interesting, and you guys get to see. And now the last part is what this reminds me of. I don't think it was. I think they call it the Shanghai, because it was it the Paris Accord? I think it was the Paris Accord in 1973 or 79. It was after Bretton Woods, and that was 62, 63, or 69. Damn, I gotta refresh myself on this. But they had something similar where this was with, it was China or the U.S. and Germany, where they would assisted to help out, where they'd set these pegs, and then the U.S. and Japan and all these other places, they would come into these agreements to stabilize the currency at the time. And the markets were much more unstable then, because they didn't you know, the economy was much more fragile, but at the same time, it was less connected as we are today, and less speculative stuff would you know, they didn't get as many moves exasperated like we do today with all the stuff in the market. So it was interesting, but it was the same thing that happened where that they did these accords, and that's where you guys got to see. I still need to finish. I have half of it done. I did it just like this video. I got to finish it with the timing of like recessions, crashes, or failed policy intervention on markets. It takes time because these guys, when that happened during the Paris Accord and all that stuff, and I don't know if it's the Paris Accord, so please, you know, someone could look that up, or I'll go look it up and double check it when I have time for it. But you know, but familiarize. I want to, if I see this develop, you'll see me make a video, because as it gains importance, then I'm going to start fucking ripping up the history books and showing you guys the examples, but essentially that was a multi-year process where they implemented a agreement of stability. It worked for a little bit. 1-2 years go by, the balance sheets get knocked out, and that's what you got to look for. Look at trade, the U.S., all that, Apple. That's those indicators. It gets knocked out of balance, and they're like, okay, let's try this again. They try it again, then it fails 1 year later, and then everything collapses. So I think we're in the middle of that. So watching it in the stages and the opportunities to profit, that's why you guys see I'm going to be, you know, that's my plan with all this. You know, that's why I'm saying I want my time and focus, because setting up a strategy over the next, it's going to go longer than 3 months. I'm saying minimum 3 months, but you know, hopefully we get $1 billion by then. No. And that's the thing. Don't even think. I'm cool with any amount at any time, because you know, if you guys are thinking, oh, this 3 months, I'm gonna change my life. No fucking way. That's kick rocks, because you're gonna make me lose money. You're gonna rob my blessing. No way. It's not gonna work like that. I'm telling you, it's not. So don't even let me hype you. I would get more viewership. I could run it on the 3 months. No, it's not. Dude, chill the fuck out. Okay. I promise you that if you are not expecting something, you are going to have a clearer head to make plays. If you're expecting something, you know, that's what I tell people. I say, just dude, keep your dick in your pants, okay? For real. So be smart, okay? But that's where I'm saying I'm trying to set myself up over this. It's going to be excited, but I'll leave it there. You guys got one of your challenge tasks. Maybe I add another one right here. I could, I need graphics, okay? So I'm not going to give the full task just yet. Actually, I think I might just give it. I think I might just give you guys the whole task. I need a stream overlay. So I'll talk about it actually on stream. So you guys can start thinking stream overlay and artwork for it. I'm going to give the specific requirements on stream tomorrow. Tomorrow's going to be a popping one. So I already gave you guys one challenge, and you have this one now too. So stay in school. Give me some love. What do you guys think? How many of you have heard about the Shanghai Accord?